Hey everybody, Boris Schlossberg. Welcome to the Trading Battle sponsored by ACAP today. Amazing show, Trading Battle number 53 with two old-time pros who are going to share some of the most interesting trade ideas with us and some trade strategies as well. From Arizona, we have Blake Morrow, better known as Pipzar, who, of course, needs no introduction, and he's got his boxing gloves on. He's ready. He's ready to rumble.
That's right.
And from way of Naples, Florida, we have an old hand with us, Scott Welsh, another amazingly weathered, let's say experienced. Experienced is the right word.
I didn't know there were going to be boxing gloves. I mean, I'm leaving. I'm not going to get hit in the face by Blake.
Hey,
it's like, all right. I can't touch my mouse anyway, so.
Oh, well, that makes it easier. That's right.
Right.
I think, Scott, you came from the Northeast originally, right? Or you used to
Ohio. Yeah.
Ohio. So it's like I said, that old Rodney Dangerfield joke. I went to a hockey game and a fight broke out. So that's where we.
All the serial killers are from Ohio. So there you go. Yeah.
Oh, that's really not news I needed to know. But yeah, that's fine. No. Anyways, speaking of crazy, the markets have just been absolutely insane over the last couple of weeks. I mean, I don't think anybody in their right mind could have predicted the following scenario. First quarter GDP is negative for the first time, I think, in how many, 5-6 years or whatever it was. At the same time as there's literally nobody without a job. Everybody, not only does everybody have a job, but people are dying to pay you more money so that you could just work. You could quit tomorrow and find 5 jobs if you wanted to. It's just kind of an insane situation where we have record inflation, record employment, obviously tremendous amount of geopolitical pressure in Ukraine, COVID lockdown in China, which basically is taking off literally the world's manufacturing facilities offline. And, Elon Musk taking out Twitter and must have missed all of this. It's kind of like
Why not?
It really, really feels like, we're dancing at the end of the world situation. But it does create, I think, sort of a very murky macro picture. And I'd love to hear your opinion on where you guys think the markets are going. Let me ask you, Blake, what's your just general read of what the market is doing at this point?
Well, glad you asked, and thanks for inviting me back. It's nice to be back with you guys. We are in obviously a crazy macro environment, as you pointed out. A couple of things that are standing out most to me is the GDP numbers that we got today in the U.S. Now, those are backward looking, obviously, but when you match that with the current inflationary rate that we have, that spells, the S word that no one really likes to hear. But that is probably going to reverberate through the markets moving forward. And I think, we have so many young traders, so many portfolio managers, so many people that are sitting on desks that haven't been around as long as, unfortunately, the three of us have been.
Yes, exactly.
But you have a lot of guys and gals that are sitting on these trade desks that have never seen anything that what we're probably going to be experiencing soon. Then you put that on top of the massive amounts of investments and overinvestment. Some people would speculate into the crypto markets. It is very reminiscent of the late 90s, early 2000s, which many of us, myself included, remember very vividly. With many stocks that I had invested in, that companies that had eventually disappeared. You got that on top of everything else, and then everybody thinks that the Fed is going to come in and save us. But here we go, going into a Fed meeting, and you guys know, we see the writing on the wall. The Fed governors have been very clear on exactly what they're going to be delivering us, and I think the market is just walking right into it blindly.
Mm-hmm.
Interesting. What about you, Scott? What do you think?
Well, I love technicals and I love to do research, and a lot of all of my trades are technically based, but I love the fundamentals as much as anyone. But if you look at this market, a couple things. Number one, if you look at what does bullishness look like, so you go back and look at the chart and say 2009 March-ish, right? It goes straight up left to right. It never comes to a long-term moving average, never comes down. If it does, just barely, and it just keeps rolling. If you look at 2012, 2016, which is a sneaky bullish market. I mean, if you look at the charts, weekly chart, the thing goes straight up from 2012 to 2016. And then, of course, when Blake started, like you mentioned, 2000, 1999, or 1998 to 2000, or even to go back to 95, straight up, left to right, hardly comes down to even touch the moving average. But what's interesting, I think, is that what's happening right now looks eerily similar to what happened back in 2000. If you look at a weekly chart now, as opposed to 2000 when it was topping, it's scarily the same. Same thing in 2016 when the market took a big break. It looks eerily the same. And I think we forget, I mean, we've had a lot happen since 2020, but everyone was calling for a fall before the pandemic, right? In the 2019 and early 2020, Michael Burry and people like that were saying this market's got to fall. It's over, index funds are going to crash the world. And then instead we got a pandemic, and then there it is. And then obviously we know what happened next. A million new traders got involved. The Fed came in and propped it up, and here we go. But honestly, right now, if we look at the charts, it is really, really sketchy. And I feel like with the Fed raising rates, which is what killed the bull market in 2000, I'm not optimistic, and even though I want to be. Interesting.
It's hard for me to argue differently. Although I will say, this market has been the what is that? The Mark Twain quote? The notices of my death have been premature. It's just been like they've been perma bears forever, and the market has just been very much of a like a RoboCop market. It just comes back from, or Terminator market, it comes back from the dead. So I don't know about the stagflation thesis at this point. Stagflation in the 70s was a function of oil like quadrupling, and it was literally the economy, because the economy was all industrial. Now, we could, like, the government could literally mandate. I mean, I'm sure this is going to be very popular with everybody, but the Biden administration could simply say, look, in order to make sure that we don't, excessively use gasoline, everybody's on Zoom. Like, unless you're literally like a necessary worker, you're a physical worker. If you're a white collar worker, everybody's on Zoom, and you could just, contain demand that way. We just have so much more technology now that can overcome a lot of these stagflationary numbers that, I'm just not. Usually I'm the perma bear, but I'm just not the perma bear that everybody else seems to be at this point.
Well, at least we have Amazon to bail us out, right? Oh, wait a second.
Right, exactly. And Amazon. Speaking of Amazon, that was a big story in the closing on the close today, down 8%, kind of guiding forward weaker because, I guess post-pandemic demand, everybody's finally coming out and, starting to live life. So, not everybody's ordering every single thing, although I seem to be contributing my share to the GP still at this point.
We all think we're contributing our share to Amazon, sure.
Yeah.
But we can talk a little bit further about this whole inflationary story. Remember, you have a catalyst right now, and he happens to be, on the, east of Europe, and he's driving right now the inflation boat. And that is going to be it could be the Achilles heel in the global economy moving forward. And I mean, maybe better than me, but I don't know what to expect from Putin. And
you really want to ask me what I think we should be doing, because I'm all for just nuking them out of existence. I think we either gonna have to nuke them now or nuke them later. I might as well do it now and just finish them off. So that's my Russian point of view of geopolitics. I don't think anybody else is going to follow my
mild. Very mild take for us.
But here, take my gloves. You take the gloves. So, but no, for real though, I mean, this is, you look back and you look on catalysts that drive whatever environment. It's easy when you're looking in the rearview mirror. But today we are faced with inflationary pressures because of not only what's happening, in the Ukraine, but also what's happening with central banks and the groundwork they've laid for the last dozen or so years. I mean, this is like a slow moving train wreck. And I don't want to be a perma bear either, but I also think there's a reality that we all have to face, that the Federal Reserve is not going to be there to bail us out this time around, at least not at these current levels.
Yeah. Speaking of Federal Reserve and just the craziness, the other crazy macro aspect of it is that we are like where's the real rates? Like 500 basis points. I mean, like, Fed rates relative to real rates are just ridiculous. I think the widest they've ever been, right? I mean, the 30 years at 3%, inflation is at 8.5. We are just so under, inflation that it's and nobody, everybody's just chill. It's like really chill. Like rates really don't matter. They have finally started to move into the FX market. We'll talk a little bit about FX in the third part of the show, but it's just amazing to me the complacency. You're right, and that sense is kind of really interesting.
What we have, what we're facing, Boris, is we are facing the Fed going into this, into this next week or the next month, excuse me, and we're going to have to, next week on the 4th. So, we're going to be. That might be the liftoff of real rates, where you start to see rates really rise, and you start. So I don't know. I know the jury's out right now, but we are seeing look at what's percolating in the FX market right now. Look at the dollar index. I mean, what is that telling you right now as a trader? That tells me that people are searching for dollars, and there's an insatiable demand for dollars across the board. I know we're going to talk about the yen, but just look at the dollar. It's not just a yen story. It started off as a yen story.
It is. It's also a euro story. It's another conversation we need to have. We'll talk about that when we deal with FX. But let's just sort of talk a little bit about stocks. You have a couple of interesting stock ideas in the wake of the Amazon, decline post market. You have a sort of really out of the box, out of consensus pairs trade. So walk us through your idea of what you think is an interesting pairs trade in the equity space.
Well, first and foremost, I'm going to tell you, I come from a little bit of a biased point of view, and the reason why is my wife. She's a small business owner. She curates gifts from local artisans all around our local area, and what we've seen as a trend, her specifically, but obviously as I'm married to her. So what we've seen as a trend in recent years is people, at least American consumers, have tried to move away from Amazon. I think as Americans, just in general, we get a little, you see the empires rise, and I think we get a little hesitant that we don't want to be, on the other side of that movie, WALL-E. You remember WALL-E? And then they had that one, the one corporation that took over pretty much the whole world and ruined it.
Honestly, I kind of feel like WALL-E is really foretells our future. Like, that movie is just really, it's not science fiction, it's science fact. Like, I think we're all going to be just basically, those fat little bodies with their head on it. That's just our future.
It's happening to me as we speak, honestly. Exactly. So, but I want to show you the just, first of all, the chart in Amazon and what had happened today. Post earnings, what we can see here, and I guess I have to share my screen, right?
Yeah, just if you can share your screen.
I haven't done so yet, but I'm gonna put that up for the producers there. So Amazon reported earnings, and we're actually gapping. Post market, we're going to be below some really key support. Now, keep in mind this is a monthly chart. So Amazon, in my opinion, is breaking. It's going to be breaking down, and obviously as we go into month end, and we see, I'm not too sure what type of flows we're going to get, but we're expecting some dollar demand, probably some outflows out of U.S. equities. Well, hot on the list is going to be Amazon as it faced its earnings call today, and you can see post we're gapping down about 10% right now, and so we're going to be breaking some pretty key levels of support. And like I said, the trends to move away from your big box retailers and really support local businesses really came into view post-COVID. Once we went into lockdowns, everybody wanted to support local businesses, and I think that trend is going to continue. Where people, I do shop at Amazon. I shop from Amazon personally. I try to limit my buying from Amazon. I try to actually shop from other retailers, whether it's Best Buy or Overstock or anybody but Amazon. Obviously, I get forced into the Amazon playbook because of what they offer in their prices, but that doesn't mean that I don't search elsewhere. And I believe that's going to be a trend that is going to take place, especially as we get out of lockdowns globally. Everybody gets back to their normal life, and they stop. They start actually driving to Target or to Walmart or whatever the case may be. Anyway, so I think Amazon is a bearish story. But the flip side to that is Netflix. Netflix has been beat down like, I can make a whole bunch of analogies here, but it's been
like a cheap rag, like white armor.
Oh gosh, a redheaded, no, I'm just kidding. I'm not even gonna go there. But what we've seen is this massive devaluation of Netflix. And look, I've been a Netflix subscriber since the 90s, since I used to get DVDs from them, and reel to reel tapes. I'm joking about that. But I've been with Netflix for years, and look, I think they have a great business model. I think that if we go into a recessionary type of period where the American consumer is being squeezed by inflationary pressures, gas, energy, and it's not just the United States, it's obviously around the globe, but the consumer, after being, force fed some funds from COVID relief, that is all dried up. Consumers are using their credit cards more than ever here in the United States. You're going to see paring back on spending, and so I think Netflix, the stay-at-home movie nights are going to be fashionable in the quarters to come. So buying Netflix, shorting Amazon, that's a good pairs trade if you ask me.
It's a very interesting mean reversion trade. You basically, you're buying the grossly oversold and selling the yet to be sold, sort of the still, what's the valuation on Amazon? Still trading a couple of 100 times earnings, right?
I have to go look.
It's always in triple digits, so it's
but losing 3.8 billion net, you don't shake a stick at that. So and I'm sure investors aren't either. That's why I think it's a pairs trade. When the markets, they go up and down, and stocks move up and down together, but I think Netflix has got beaten so hard that its downside is going to be more limited at this point, where Amazon still has some downside ahead of it. And if the markets do rally, I think the ones that have been beaten down like Netflix are going to bounce back quicker than your Amazon. So I think that's a good pairs trade. You're probably going to lose money in one, make money in the other, but we hope that the Netflix will outpace Amazon, both on the downside or on the upside as the broad markets move. So.
Interesting.
Yeah.
Okay. Now, Scott, you are a much more of a technical trader, a statistical trader. I know that you do. You develop lots and lots of systems. That's what you're really well known for. You have an interesting story you were telling me before about how you've started to fool around with the opening gap trade in the S&P. And I wonder, I don't know if you could share your screen with us. I don't know if you know how to do that. If you just hit the little screen button on the bottom right next. There's the mic button. There's the.
Can you do it? It's I can. I don't know. Will it go to TradeStation though? I wonder.
You just choose, I guess, whatever the screen that you want it to go.
It's not there. I'll go share entire screen.
Yeah. Let's see. Let's see what we can see.
Oh, maybe that's it. All right. Tell me if you can see.
Don't tell us your credit card number, but no, that's okay.
I think it worked. Do you see anything?
Not yet, but it's coming. There we go. Yes, now it's coming. Great. So we got the ES, which is the S&P 500 futures symbol.
Right.
And you can see that this is the market open to the market closed. I guess today's price action. You see that little gappiness, which is, to sort of understand, the futures trade continuously 23 hours a day, but the actual cash market obviously opens up at 9:30 New York time every day and closes at 4:15 New York time, 16:15 New York time the following day. So that gap in between last night's close to today's open, that's an interesting gap that appears on the cash side. So maybe you can walk us through what kind of stuff you've been doing.
Well, I've been technical forever, really, and I've started building Forex robots back in 2012, and I kind of went into that deep dive and haven't only recently come out of it. I started as a stock trader and then just gave that up for years and years, and now I'm coming back to it. And I've been curious about futures for a long time. And then you do a little reading and you find the gap guy. It's Andrews, his last name. Is it Scott Andrews? And he's been around forever, been doing gap strategies forever. And it's like, oh, this is brand new to me. I couldn't believe it. It's very technical. It's not exciting. It's 100% boring. But he's done the research going back 10, 15, 20 years, which is right up my alley. And his idea is you fade gaps in the ES. Now, this is the ES.D, so it only trades the actual live market, the Eastern time, 9:30 to 4.
Right.
But if the market gaps up, which you can see on my screen, the percentages of it filling that gap are just outrageous. And it's been outrageous for decades, in the 70 to 80%. And the success of it is, how crazy is the gap? Which is weird. You'd think the crazy gaps would be better, because clearly if it gaps up high, it's going to come back down. But that's actually not. The higher percentage trade is when the gap is mild, right? Meaning it doesn't gap even above yesterday's high or yesterday's low.
Right.
And so the idea is,
and
wait for it to gap up.
There's actually a reason. The bigger the gap, it's called the runaway gap. The bigger the reason, the bigger the gap, when you have a runaway gap, it usually means an extraordinary event, an extraordinary macro event that is unlikely to be reversed instantaneously. It means that the market is just really wrong-footed, and everybody needs to go to that side. And anytime that side tries to come back, everybody just tries to dump more and more positions and pushes it up. So that's why when you have runaway gaps, they're very rare. Those are things you don't want to fade. But on a general basis, dealers love to open them high, bring them down, or open them low, bring them up. I mean, that's the first half hour of the market. We're always buying. We're always selling highs, buying lows, because that's what the dealers do. I do the same thing, but it's interesting. Yeah.
Yeah, and this is the actual live trade from today in a real account. It just goes for small profit target. You could trade the whole gap, but I don't.
Can you walk us through the anatomy of that trade? So this was a trade put on 9:35, 9:30. What? Give me the specifics of how you ran this.
1 minute chart. So if you want to get in right away. If you do a 5 minute chart, then there's a little bit of delay. Although the data seems to show that 5 minutes is okay too. So it's a 1 minute chart. It opens. If this has not gapped too high, meaning within range of yesterday's high, and the opposite is true if it's low. So it's inside the high of yesterday. It sells immediately on the second bar, so 2 minutes in. And then it just goes for a small profit target and gives it a little bigger stop. Actually, it's a reverse risk to reward, which I don't particularly like, but that's the way this one worked out. And you can see it immediately filled for a little bit of a winner. It doesn't seem substantial to me, right? Coming from the thousands and thousands of tests that I've run on Forex and other systems. But just to give you an idea, here's performance report. Just in the past few years, I mean, it doesn't trade a ton, but even though it's down a little bit in the craziness of the first 3 months, I'm personally up in it so far, and it's super consistent. It's crazy. And I guess what shocked me the most is that for me, and you may know better, year 2000, 1999, 2001, there's no way this would work to me. That's what was in my heart. And it works great. In the huge .com meltdown, this just cranked right along, and it worked in 2008. It was profitable. So I've been
the higher the volatility, the better this works. That's the irony of the whole. The higher the volatility, the better, because the higher volatility, by its very nature, the extreme has to be rebalanced. Everything just becomes the gap open becomes huge, and they got to take the profits right away. The moves go from like 5 points, 10 points to like 30, 40 points. The ATR in that first 5 minutes of the higher volatility regimes is just much, much higher. So what are the points? Do you trade it with like a 6 point stop, 3 point target? Like what kind of a general point?
I go for $200 and a $500 stop.
But is that it's $50 a point, so that's $4 target and $500 stop, so $410. You so 4 points.
Yep.
You go for 4 point profit and a 10 point stop.
And 10. Yep, you got it. Yep.
Okay.
100%.
Yeah, that's interesting. Really
Isn't that crazy?
Really interesting.
I know.
Yeah. So there's lots of interesting equity stuff for people to mull on. But now I kind of want to, turn our attention to the second part of our show. I call it Trader's Choice or Dealer's Choice, where I kind of want you guys to take a look at the whole commodity universe and tell me what your favorite trade, and also just sort of, your broad view of the commodities sector is at this point. And I'll start with you, Blake. What do you like in the commodity space, and just generally, how is your view on commodities? Given given the situation that we're seeing right now, which is also very confused. Oh, we lost Blake. Your volume?
No, that was me.
Here.
No, sorry. I hit my mute button for a second there. I want to say regarding inflationary pressures, I think they're going to be persistent. So therefore, I really look at the commodities market through the lens of being bullish. But it depends on what assets, what commodities I'm more bullish. But if you really want my view on like precious metals, I'm actually bullish gold and silver, not in the very near term, but I am bullish and bullish in the very intermediate term. So what I'll do really quick.
Yeah, can you pull up your chart? Because I want to ask you why. I mean, why? I don't. Gold looks horrible to me. Like look at this. This is like a loser chart. But maybe you're seeing something that I'm not.
Okay, well let's stop there and say it's a loser chart, but let's look at the long-term charts of gold too, like what it's done in recent years. I mean, this is a monthly chart, so gold is near its highs. It hasn't performed as well as most people have wanted, but I still think it is an asset that is a rarity, and it's going to perform better in an inflationary environment. And I still think you got to buy dips. And you saw that monthly chart. That's more of a cup and handle pattern than anything. I mean, if Scott, you're a technical guy. You know what I'm talking about. This is more of a complex.
Okay, it's a cup and handle, but it's got to validate itself. Like I got to see gold print 2100 and hold it before
Sure, and I believe it's been a long time coming, and I still think you can buy it on dips. And one of the things that have really prevented gold from moving higher is one of the longest standing correlations, in my view, has been dollar up, gold down, vice versa. And so when there's a demand for gold or demand for dollars, gold demand is going to be suppressed. And I believe that our recent weakness that we've seen in gold, and let me remove this screen line right here. Yeah. This has been more of a product of dollar strength. And do I believe?
Can I ask you a question on that? That's a really interesting thing. Do you think that the reason for that is that global central banks need dollars to buy commodities, because every commodity in the world is dollar denominated, including obviously the most important, which is oil. And in order to raise dollars, they're actually dumping some of their gold reserves. Do you think that could be the reason?
I think that could probably be some of it. I think you could probably come to that conclusion. But I also think that gold is going to be once again support on dips. I don't think that the dollar's reign is the top of the dollar is that far away. Do I think it's today? Not yet. But do I believe we're kind of close? I think we're probably nearing it. Whether it's euro at parity or dollar yen at 150, I still think that the dollar itself as an index is going to be tradable on the short side in the coming weeks and months ahead. But I also look at gold as, like I said, constructive. And technically, I believe this is what we call a Gartley pattern. You have this pattern that sets up really for a dip down to the 78% retracement, or really the 200-day moving average, that sets up from a good risk-reward perspective. And as a trader, as Scott, you were just talking a little bit about risk versus reward. Look, that's all I can control as a trader. I can have all of these crazy, wacky ideas, but really I use technical analysis to drive my entries on where I want to enter based on my thesis that I have, the idea that I have behind the trade. So me wanting to be long gold, is it a great long right now? No, not to me. But is it a great long down here at the 200-day moving average? For me, absolutely, because then I can control my risk from here. So if my entry is down at the 200-day moving average, or let's just call it 1830, I know that my risk really is below 1815. It drops below that, I don't want to be long gold. And I can control a good, risk reward where I can risk one to make 5 or 6.
Yeah, but the markets are never that easy. Let me ask you the following scenario: you buy 30, it dips 15, you get stopped. It goes back up to 30. You go back into the trade. Will you try to trade a couple of times?
No, trade's usually over for me. Once I get stopped out, it's over. But I make sure it's in a good spot. I'm giving you guys kind of like a basic overview. But really, gold isn't the trade that I like as much as I like silver, I actually think silver is a better option at 2250 or 2230, somewhere around there. Is going to be a better setup for a long down at these levels. And what as a technical trader, I just look for multiple levels of confluence. And in this case, this is an 88% retracement, 161% extension, close to anyway. You can argue that. And then, a trend line support. I've got triple confluence right there. And so if I want to be long, it's just picking my battles where I want to be long. In my head, I know I want to own something or I want to short something, but acting on it, it's all about where you enter and where you're risking. Right. And those are the setups for me.
Interesting. Yes. I mean, that's a really good point. It's all about the field of play. It's all about, like you said, taking the position where you have some semblance of an edge, or at least your belief of where your edge lies.
It's interesting because that's what we control, right? That's what we control as traders. I can't control Putin. I cannot control the Fed. I cannot control the Bank of England, next week. I can't control any of that. What I can control are my entries and my stops and my risk that's laid out in front of me. So
right. Interesting. Excuse me. What about? Oh, I'm sorry, guys. I'm still on the last vestiges of my cold. Scott, what about you? On what do you see technically on the commodity front, or how do you feel about any of the comp price action at this point?
Well, first of all, I do want to say I was in an event at Vegas, just a small live event in Vegas, not too long ago, several months ago, and there was a guy setting up the computers, a bunch of helpers, whatever, setting up the monitors, and he stopped. I was in the middle of a conversation with a friend of mine, and he stopped me, interrupted, and told me that when the new world economy happens, when all money is abolished, silver will be the only currency, and that it will be the one that you stop the barbarians from invading.
Are you sure
that wasn't true? I mean, it was. Did you meet Nostradamus? Was he there? Was he having a good day?
He might have been there, but I'm not sure. So I've sold everything and just bought silver. So I thought that was smart advice. No. As far as
just wouldn't it be funny if like Nostradamus came back as like a Las Vegas lounge singer, like just like this kind of louche guy, and it just nobody would believe him because he was so sleazy? That would be very funny.
Dude, I saw Mr. Miyagi in a lounge in Vegas, freewheeling it.
Really?
Awesome.
That must have been heartbreaking.
Yeah, Pat was drunk as could be. It was awesome. Wow. Obviously, it was probably about 15 years ago.
It didn't destroy all your childhood memories?
No. Love the guy. Love him.
Great. Awesome. So anyways,
yes.
So Scott, you're talking about silver. Yeah.
As I'm a pretty hardcore trend follower. I dabbled in everything, but I'm very systematic, very hardcore trend follower now. I love it. It makes sense to me. That's where all my money trades. That being said, I've always been puzzled by people who want to trade trends and yet don't trade things that trend. I listen to podcasts with very successful managers managing hundreds of millions of dollars, and they trade stuff that doesn't trend. And it always puzzles me. I never get it. I guess I'm just not smart enough to understand why you should trade something that doesn't trend. But as a trend follower,
because it will. You don't understand. It will. Go ahead. Yeah.
Okay, it will. Yes. All right. So gold and silver for me, in the commodities, I'm not live in the market in commodities, but I do research on it, and I will be soon. But of the two commodities that I've studied, gold and silver are the ones that move. So I like to put simple breakout trend following systems on them. So simple that it seems like they shouldn't work. And I watch them, and usually I watch something for a year to 2 or even 3 years before I put real money on it, which is too slow, I realize, but that's the way it goes. And which brings us to the chart right here. This is just a simple 240-minute chart on the continuous contract of silver. And you can see this line up here. I'm trying to trade breakouts, and that's a 50 bar high. It's not day because it's a 4-hour bar, but it's a 50 high.
This is 50 bar highs. It's not Dokian channels. It's just 50 bar highs. Okay.
Yeah. Correct. 100%. Yeah. Just 50 and 50. Where do I get 50? Because the turtles traded 55, and anything around 50, 55, 60 is fine with me. Okay. So this trades, if it breaks out above the high, it goes. If it breaks out below the low. As you know about trend following, it's not 100% successful. I mean, most trend followers are 40 or 50, but they try to, like Blake said, do a great risk to reward, and the math works out.
Right.
So my current trade, if I were trading this live, you can see the silver broke down, and this cyan bar is a winning trade. That's a break-even trade. And then right here at 23.49, 23.50, it's short. My automated system would be short. That's where my bias would be. I don't have a good reason for it, except statistically, I like to trade breakouts long and short. And we've got kind of a nothing bar here. So if you were such a trader, you could even add a little bit more to your short position with your stop being very tight. It'll be back here either on a trailing stop or on a dollar stop. And so I'd be short right now, silver, trying to ride this as long as you can. Now, something this simple, 50-day breakout. I'll show you. Let me show you real quick. You can take a look. It's going for a $3,000 target on one contract and a $1,500 stop. It's a 50-bar breakout. The trailing stop.
Putting it into silver terms, is that like a 30-cent move in silver against the 15-cent stop, something like that?
I would say so. Yes, I'm no expert in silver, but yes, you're probably right.
Right.
You got the trailing stop of the low or the high. I'm sorry, for this one to be the high, the past 15 bars. Okay. And then it only goes for 15 bars too. There's a time exit, so it doesn't last forever. So I want to see a move. I'm 2-to-1 on my risk to reward. And if it doesn't do anything, it just kind of gets out. Pretty boring, but it's crazy. If you go back to 2001, it makes 250,000 and
look at that profit factor. It's 149 on profit factor. I always look at profit factor as my number one thing, because that tells you really the most important thing you need to know.
Yeah. It's just a simple little system. That's the equity curve. I mean, so I would follow this. I don't have any good fundamental reasons, but I'd be short and I'd be probably adding on to my position for the trade battle. That's what I would do.
Interesting. Well, it's not, intellectually, you guys are actually not on the opposite sides of the fence here, because it's not like Blake is bullish now. Blake is bullish later. Blake is bullish for the future trend that is to come. You're trading the present trend that is to the downside. Which
I do think I agree that it's trading heavy. I mean, actually, the precious metals have been trading really heavy. So, and silver specific.
Today, honestly, I've been super bearish. Like I even gave up. Like I was gold is garbage. Like, why are we even bothering trading in my room? Because it's trading so heavy. And today was the first day I started watching. We put it back on the charts. Today was the first sort of technically healthy day on gold. I don't know if you noticed it. We had a strong bid in gold, And today was a crazy day. We had a strong bid in gold, strong bid in oil, and 2% up on NASDAQ. I'm like, this, one of these things doesn't belong, And
it's a bull market.
And Elon bought Twitter. Yes.
Woo! That's crazy. It's just, and I think maybe that's one of the interesting things, that maybe the new is where all of these old rules that we kind of are used to trading are going to start breaking apart. Where
they haven't started breaking apart, Boris. Anything that you've learned over the last 20 years, especially if you're drawing your trades based on correlations, that is gone. And that's why I'm sitting here. I know we're going to talk about FX in a little bit,
right?
But I'm getting pretty bullish the Aussie dollar down at these levels, and haven't pulled the trigger yet, but I'm getting there.
Right.
So
right. Well, I think it's time. I mean, there's 3 old FX horses. We all come out of FX originally. We kind of, all gone our separate ways at this point. It's time to talk about, the mother market, because it's really, really fascinating. There's just, first of all, dollar yen 131 is insane. I don't know what Kuroda is doing. He's probably having a heart attack every other day. Just from a macro point of view, let's just kind of think through what's going on in Japan. There's 2 things that are interesting. Japan is the largest buyer of U.S. treasuries. It's not China, it's Japan. They actually recycle all of their, current account surplus into U.S. treasuries because it's the only yield they can have. And they do something what's called the currency basis trade, where they hedge out the currency risk to try to get the U.S. yield. It's like, 2 months ago, they could buy at 110. Now they're like 131. They've had a 20% cost of increase to buy U.S. treasuries. It means one of the very, very strong buyers of U.S. treasuries has been really hampered, right? Plus, Japan is perennially a buyer of oil. It just can't, and it's still an industrial economy. Japan is still very much an industrial producer. not really a high tech producer the way we are. We're basically we manufacture Twitter and Insta and pretty pictures, and everybody else in the world really makes things that work. So it's a big tax on them. It's kind of I'm just from a policy point of view. What do you think is going to happen there? Just from a policy point of view, they talk about putting a corner. They are really.
I think the BOJ was pretty clear last night, Boris, that they have to either give up for their bond markets, or they have to give up their currency, and they are pretty clear that they are going to let the currency run lower, and at least for now. And the problem is, as you pointed out, that the inflationary pressures that they're going to continue to face with a weakening currency is only going to weigh heavily on their economy. I mean, they import everything. They do. So
the cost of inputs is enormous for them.
Yeah, and it's going to get big. It's going to get bigger as the yen moves lower. And I'd actually love to show you guys a chart of the yen, because we've actually had, and this is I have one of my colleagues. He traded on a yen desk for like the last 5 years of his career, of his 40-year FX trading career, and he's been very bearish yen. He was up. He's in the UK, and he's looking for 150. And technically speaking, this is I'm showing you 20 some odd years, 30 years of yen consolidation, and you're seeing the breakdown in yen, the rally in the dollar yen. It's not Bretton Woods levels that we're going to be going to, but trading up towards 150. Technically, I don't think it is it is an impossibility. Now, I know a lot of you may look at the move in yen and say there's no way that's going to happen, but it's taking place as we speak. And following the BOJ, if we do not hear any comments from the Ministry of Finance, then this weakness is just going to continue, and that trade is going to rally on. And I want to mention one last thing. Talking to some of the producers here in the show, crypto people are now starting to talk about the yen. And you know what that means? Crypto traders, and excuse me if any of you listening in are newer crypto traders, but a lot of that community are new traders. They're traders that have not been in the markets for years. And the one, for retail traders, the number one characteristic of them is going to be fading trends, because that's just what traders like to do. They think everything reverts back to the mean. And so what happens is you get a bunch of new traders that are in crypto talking about yen, and they want to start buying yen because they want to sell dollar yen because they think it's too high and it can't go any higher, and divergent relative strength, and beyond some oscillators, and pushing Bollinger Bands, outside Bollinger Bands, so it should come down. And those are the ones that end up getting run over. So I think there's a lot working against the yen right now, and I personally can't find a reason to buy yen. Like, give me a macro reason. Tell me, Boris, should I be buying yen right now? Or Scott, please, somebody tell me.
The only reason, in my opinion, is just mean reversion. I mean, I'm short yen for 100 points just to see if it comes into the 130. That literally, there is zero fundamental reason for me to be long, a long yen at this point.
And Boris, I remember, this is back before you and I actually knew each other, and I saw you on Bloomberg or on CNBC back when Abe did the three-prong economic approach. Right. Remember that? And remember the dollar yen that kept running? And I remember, you talking about it, and I was like, man, I don't know. I think we're going to continue to weaken. And it just continued to go and go and go. And I vividly remember that, because I remember what office I was sitting in, and I remember watching you going, I don't know if that's going to stop, and these moves, when they get going. One thing that we can take away from the FX market is it is a trending market. Central banks move like molasses. And when things trend, they trend for a while. So you have to be cognizant of that. And can we get 100 pip pullback? Yeah, but
no, it's true. No, I mean, you're right. I mean, it's a scalping position, in my opinion. This is I'm not making any positional trades. Can I ask you guys sort of a more technical question on yen? Generally dollar yen, one of the strengths of dollar yen trade has been the carry, but I don't know if you guys are finding this. I mean, I was just shocked. I was looking at, carry rolls across all brokers, and it's really bad still. We're nobody's really paying you to be long dollar yen. Are you
Yeah,
surprised?
that is surprising. And Scott, I'll let you address that because I know you like carry trades. But back at last year, I said, the trade of 2022 is going to be carry trades, sell yen, buy everything. But you're right, you're not getting paid for it, and I don't know why. I mean, Scott, maybe you have a better answer.
No, I don't know either. It's very, very good. I don't know. It seems like for me, I mean, my trades last a couple days or maybe a week or two. So, I found that it's not going great as far as, the carryover in my account every day. What I'm seeing in my account, like, that's not part of the equation. Like, it's just not part of what I'm built in.
For a while, I saw negative carry on both sides, which is just ridiculous. I'm like, it's kind of punitive. But, I think it's probably in the money markets because obviously the broker is just reflecting what's going on in the interbank market where, nobody's really willing to pay you anything at this point.
Well, you said it earlier, right, Boris? You wait till real rates start going higher, and then that's when they're going to pay you for that, and it's pricey, right? It's kind of like buying options, like long dated options. It's like, everybody's like, if it continues to go higher, then they're going to start paying you yield to try to attract you to it. But right now, the move is up. And it's short yen, and they're not willing to pay you for it right now.
You have certainly not needed carry to make money in dollar yen, so it's been. Scott, maybe you can pull up the charts if you like. I'm just curious, since you're such a trend follower, maybe you can give us a read on what you're seeing in the yen and where you think, extent it may go, or how are you trading it? You seem to be trading a little bit more of a tactical methodology. Are you just buying breakouts? Are you buying pullbacks within this trend? What's your approach to yen at this point?
Well, I'll show you just a Japanese yen commodity, and it's pretty one-way traffic, right? There's only one story.
So that viewers who are watching this at home are not confused. This is the dollar yen futures, which is inverse. This is inverse. Okay.
Right.
So, the dollar is trading. The yen is going down against the dollar, and that's why it's moving lower. So just so you know, so you're not looking going, how does this make sense?
It is. Exactly. It is backwards.
Inverse of the FX spot because the futures are always denominated in dollars, and yen is inverted. So go ahead.
Thank you.
Give us a
Thank
shot.
you, Boris. Excellent point.
Yeah.
You can see this was my trading in 2022. This stuff doesn't do me any good. I did not enjoy the first 3 months. This I like very much, and lately, this one-way traffic has been very, very good. Going over to the pound yen. Let's see if I can get back to pound yen.
Now, is this the same kind of the 240 bar 50-50 period breakdowns? Is that what you're doing?
No, that was daily. Yeah, that was daily. I either do the daily or the 240. Yeah, but that was daily.
The same concepts. It's same concepts. You're hitting the breakdowns. You're just letting price action take you into trades.
Right. And same thing here. This is a 4-hour chart of the pound yen. Can you see that, Boris?
It'll come up in just 1 second. Let's just give it a shot.
And Scott, while you're pulling up those charts, can I ask you, do you ever look at like positioning, like CFTC positioning or sentiment index or anything like that? Do you take that into account at all?
I don't. I'm 100% mathematical. I mean, I do as a human being, and I love studying that stuff. And many times I'm in a trade, and every bit of fundamental thought in my head is like, man, I wish I wasn't in this trade. But it's all math-based for me.
I got to tell you, I'm kind of like with Scott. Like the longer I trade, I think all sentiment is reflected in price. Like if you want to know sentiment, look at price. And I trade very mathematically, just like you. Obviously different approaches. Different. I'm much more of a mean reversion trader, so on and so forth. But like I have lots of views, but my cues are always mathematical, and I find that to be a much more pure way of looking at the market. It's interesting. I agree that.
But as a trend follower, I would think that if you have some of those other indicators in your behind your back, so you're following not a headwind but a tailwind, I would think that would be a benefit.
Definitely. The only thing for me is that I can't test it. That's really, I mean, it's hard. It's hard to
I'll tell you where
quantify
it's
it.
not a benefit. I'll tell you what,
Right.
like if price is your only variable, you have a very pure approach to the market. It's super clean intellectually and emotionally. You're not confused by like the million, countervailing macro forces that are coming in. And that actually helps me, at least from my perspective, helped me really clarify my trading a lot more. Like I've become a much better trader since I stopped paying attention to fundamentals, even though obviously I'm very fundamentally aware, but my own trading has just been purely price driven and it's been a much cleaner trade that way.
For me, it just fits. That's just kind of my personality. But I love all the fundamental, and I think Blake's right. There are probably trades that I could have not taken if I had looked at something else. But just to keep everything consistent, I don't. However, if I'm looking at the pound yen, which is my favorite one to trade of all the yens, this is a bunch of divergence lines, just an indicator, and this is bearish sentiment, right? If it's more indicators go oversold, this is Rob Booker's indicator. You can see that I was going long all the way, but then all of these started screaming short, and then we got another bearish indicator, and you can see we had a fall. For me, I'm right in the middle here. I can see an explosion, and what Blake said made me feel like that's probably where it's going to go. But I can also see this too. This is just I probably will see some sideways, and we're going to see another big move like we've been seeing. But right now, this looks like it doesn't know quite what to do to me.
What about, can we look at some of the other yen cross? Because pound yen has a very idiosyncratic story because the pound weakness has just been extraordinary. Also, actually, euro weakness, and we have a little bit of time. I'd love to just get your reads on euro itself because that has a very, very, 105. It hasn't been 105 since I didn't have gray hair. It's it's amazing.
Look at that, right? I would definitely be. I trade breakouts, so I don't see a breakout long just yet. It's got to go sideways for me to actually take a trade in real life. But boy, I would want with all of my heart to get in here, maybe put a stop below this low and see if I could get it to rise up to 1.1064 or any of those.
I tell you, this would have been murder for my mean reversion trade. This is literally the nightmare of anybody who likes to buy bottom, sell tops, because literally every tiny candle that is a reversal candle is just gets swamped. Continuing.
Yep.
This is a very, very straight.
The price action is so bearish, guys, and I see people just consistently trying to pick the bottom here, but technically, if you look at the euro, it's from the creation of the euro. We broke that trend line when it was at 108, I think. So as long as we stay below 108, it's going to be a tough trade to buy.
Well, but the only thing I will say, sometimes it goes this way, but everybody and their mother is talking parity, and because everybody and their mother is talking parity, I'm not looking for a rally, but I'm looking for a bounce. I think this 105, 104. We're probably going to squeeze out to 106, 107, just because everybody's convinced parity, and we got to squeeze out the late shorts. But I think parity is really, but it's going to be interesting. You think the Germans are going to be happy about parity, or they're going to be mad about parity? At this point, it's a push.
Mm-hmm. Yeah, it is. I would think that everybody with this, everybody that wants to fight inflation, that in Europe you're kind of stuck between a rock and a hard place, right? You fight inflation on one hand. Yeah. You want a stronger currency to tackle that. It would definitely help. At the same time, you look at the calendar year and you go, damn it, we're heading into the summer months, and how weaker currency is going to help. Whether you're talking Italy, France,
you're right.
It's like
that's actually
a really good point, right?
Right, that's actually a really good point, especially Greece. You know who's happiest of all of this is Greece, because literally 25% of their GDP is tourism, and they've been just destroyed because of COVID and everything else. Maybe hey, it's time to buy Greek stocks, guys, on the lower euro long tourism trade. That's a theme that we can look at.
What's amazing? Both Scott, you may not know this, but Boris, you do. My two partners or founders of Forex Analytics are both in Athens. And
Right.
one of them just bought tickets to come to the United States to visit and stay. Their family's going to stay with our family in the fall. The cost from Americans buying the same ticket to go back and forth to Greece, and it's 40% higher for Americans to buy.
It was a sticker shock for him. It was a sticker
It's
shock.
crazy.
Yeah.
Just bought those today. I was like, oh, wow.
Yeah.
Anyway.
On the other hand, we should all go to Athens, and go to the birthplace of Western civilization.
Let's all see the Aegean Sea. It's the most beautiful.
Or we just go to Santorini and just drink Greek liqueur and enjoy it.
Yes, sir. We will drink ouzo till the sun comes up.
Exactly.
So,
Well, you guys, it's been a really fascinating talk with you guys about all the markets. Really, really interesting. There was one last thing you had, which I kind of want to bring up. A long time ago, a long while ago, you said, I want to be buyer Aussie 69. And I was laughing at you on the show. It was like Aussie was trading 77. I'm like, okay, Grandpa, we'll wait for that trade. And it seems like it's really coming into your level at this point. So can you give me an idea of why Aussie you think is an interesting long at this point? Or,
yeah, I will. And I can show you guys. I've been along like the trade of 2022. When I was asked like, hey, Blake, what's your trade of 2022? I had to film it. And I said, I'm gonna actually talk about the Aussie dollar because I thought the Aussie buying it at 70 cents or below 70 cents was going to be the trade of the year for me. I think the Aussie has been being viewed differently as a currency. It's not going to be your risk on, risk off type of trade. We've obviously had a bearish breakdown. When we broke the 618 retracement here at 73 cents, 200-day moving average, been straight shot down since then. However, what I'm looking for is I'm actually looking for a move below 70 cents, probably closer to 68, 69 cents, where I'm going to be a buyer. And that's going to be the level that I want to be long. I'm old enough to remember a day when the Aussie was trading at parity to the U.S. dollar.
Yeah, so am I.
Yeah, and I don't think those days are far away. I think this was a generational low that we'll never see again. I say generational probably for me. Maybe some of you youngsters that aren't 50 years old might not. But for me, somewhere down here in the 68, 69 cent level is the place that I want to be a buyer, looking for levels well above 80 cents in years and months ahead. So that's the way I'm going to approach the Aussie personally.
Sounds good. Interesting.
Yeah.
All right. Well, I want to wrap up just sort of asking you guys a little bit about your projects, what's going on with you, where people can find you. And Scott has got some good news. I mean, Scott has been participating in the futures trading competitions over the years, right? And you are, and you're in Forex, right? The Forex, Forex trading competition. Can you tell us a little bit about that competition? What you're doing and like what it entails, and just your position in it at this point.
Sure. I'm fascinated by trading contests and not the ones that are, shady and demo accounts, right? But people who put real money on the line. It made Mark Minervini famous, winning the U.S. Investing Championship. I mean, that's the prestigious thing back in the 90s. And he just won it again last year, almost 2 decades apart. There's something about trying to make a lot of money without being a crazy person, right? It's like it raises your expectations, 10% a year, 20% a year, that's fine. You can make a living like that forever. But what are these guys trying to make triple digits or 50% a year, 70% a year, 100, 200% a year? Like, I really got fascinated by how they thought. So I thought, well, let's try it. So I found a real money trading contest a couple years ago. It's called the World Cup Trading Contest, and it's futures and Forex. And I put one of my automated strategies on it.
Like how much of a buy-in do you have to do in that contest?
Minimum 5,000.
Okay.
And for futures, it's 25,000.
Okay.
You can put multiple accounts, but I just put one account in, and in 2020, and it did okay. Ended up finishing the top 5. I finished second, so that was fun. Trying it again this year, and the first 3 months, like I said, I didn't go anywhere, but those strong trends have gotten me back in the top 5. So I just really like it. It keeps me focused. It's fun to look at the leaderboard, and it's fun to take on a little bit of risk. It's probably more risk than anyone should take, but it's not outrageously risky, and I kind of like that. So
maybe you can give us an idea, year to date, like what's been your return that's putting you in there? Is it like 10%, 15%? Are you like close
I'll
to?
tell you exactly. It is 36. Let's see.
Wow, so you're putting on some size, my friend.
36.9 exactly. Yes.
Okay.
That's
36.8.
awesome.
Yes, I'm not putting in micro lots. That's true.
Right, right, and the markets have been kind to you because I guess you're putting in size and you're getting those great trends, so you're compounding early, and then you can when it retraces, it's smaller. It's like when you're a trend trader, you always want to win first. That's what
Yes.
people don't understand.
Yes.
That's like one of those little things they never tell you. The key to being
Right.
a trend trader is to win first, lose later. When you're trading like me, you want to you don't care about losing first. You just want to make money continuously. It's very different.
And no doubt, when you're a trend follower, if you can catch the first couple winners, that makes a world of difference. No doubt about it.
Okay.
But yeah, I have stop losses and all that, so it's not super crazy, but yes, it's
Right.
100% aggressive. Absolutely.
That's great. So what else are you doing? Is there, where could people find you? And
ScottWelshStrategies.com. I do have
Okay.
software, and I do a newsletter 4 times a week. I give away a lot of free systems that people can try that I think actually work. I would like the regular person to have something besides index funds. That's kind of my passion. I feel it's horrible. You meet someone on the street and they say, just buy index funds. I feel like we can all do better. So at ScottWelshStrategies.com, you can go and you can contact me, send me an email. I'll email you back. But yeah, I provide software for regular people if they want to try to do better than an index fund. So that's my goal.
That's wonderful. That's wonderful. And just to let you guys know, both of the traders, because we're living in unfortunately very unfortunate times, are trading for Ukraine. So the charity, whoever wins, hopefully Ukraine is the ultimate winner here because we're all.
I was just going to ask you, when are we putting on those trades, and are we going to talk about those, Boris?
So those we've put on. So sort of just to summarize, we're going to take those trades on. When the markets open tomorrow, we'll do the pair trade for you, right? We'll do the gap trade for Scott, assuming there's a gap trade, coming up, and then obviously we're gonna do your long. Well, we're gonna put you market gold, I guess, at this point, because we're not gonna wait for 5 years for you to come in, for gold to come in on this, and we're gonna stay short silver because Scott is short silver. It continues to trend.
Yep.
And then finally, I guess both of you guys are long yen. I mean, like I'm the only guy short. I'm the only guy offering it. So I'll take the 100-point scalp if it comes to me.
Oh,
but
man.
You guys are both long. So we're going to mark all those trades, and then we're going to come back in 5 days. Everybody who's watching us, make sure you obviously subscribe, because the moment you subscribe, you're going to get an update as to the total, P&L of how both of the traders are doing, and you get a good idea. And then, as I said, doesn't matter who wins. Ukraine wins out of this, which is really, really good news. Now, Blake, I didn't get a chance to ask you. What's going on with you? Hang on, I'm sorry. That's my son. Of course, my son has the impeccable timing of always calling me during the show.
My kids do the same thing.
Inevitable. That's what we have children for, so they can ruin our lives. So Blake, tell me what you're doing, and where people can find you, and what's sort of your latest and the greatest project going on right now.
Well, thanks for asking. I'm for those of you that don't know me, I'm the co-founder and president of Forex Analytics. We offer every day live analysis, and it's not just from me. It comes from our whole team. We have, like I was telling you about, some of our team members. We have Ryan Littlestone, which used to be from Forex Flow Live. He's joined our team.
Yes.
We have K-Man. He's the dealer that has been on bank desk for the last 40 years. We have Stelios that worked at Barclays for 20 years, and Steve Olgaris, who's an economist. So we have a lot of voices talking about what to expect for the day, and it's free. And then after that, Dale Pinkert, our host, he interviews people like Boris. He's never interviewed you, Scott, but he's over the last 6 years, he's interviewed probably 3 to 4 to 5 people a week, 3 to 5 people a week. And this is all free. And they're guests like, I think, who was the BOE member that was just on last week? just ahead of the Bank of England decision. We had, oh gosh, he's a very outspoken one. Anyway, I could go back and figure that out. But we have so many economists, traders, and it's just a community, and obviously something that I've fostered over the last several years. So if you ever want to find me, I'm Pipzar on Twitter.
Great Twitter handle, by the way. I follow Blake. Great commentary throughout the day. He runs some really interesting notices.
That handle was given to me by a client, a trader, a client of the MB Trading way back when we did the car czar. Remember?
Right.
When the U.S. had the car czar oversee all the auto bailouts.
Right. All the autos. Oh my God.
Somebody called me the
we are.
czar.
Like old men. We should all be joining Scott and Boca at this point. Just playing shuffleboard. At this point, yeah.
Well, it was. I swear, it's been. Yeah, it definitely in the markets you could age a little bit over the years. But anyway, Forex Analytics. That's how you can find me. And thanks for having me.
Oh no, it's wonderful. I love having you guys. Your wisdom of ages is immeasurable, and the insights you guys have given are really, really fascinating. Loved having you guys. I hope everybody enjoyed it. Do not leave this show without signing up for the Trading Battle. Make sure you subscribe so you guys get the results of their trades. Follow both guys, please, on social media. They're wonderful. And I will see you guys, as always, on the internet next week. This is Boris Schlossberg for Trading Battle. Over and out.